Hi everyone, it's Christian and welcome to my video blog. And the topic of today's video blog is Canada's mortgage rules are not keeping up with the times. And I want to look at this in two ways. And first is the recent changes that we saw that were announced by the government. As you know, if you're buying a home, you do have some different things that you can do. For example, you can draw on your RRSP savings and put that towards the down payment. Now, the government changed that from $25,000 up to $35,000. But it's not going to make a big difference, not in Vancouver. Maybe in places like Atlantic Canada or on the prairies, but in Vancouver, that's really not going to make a dent. And so the change was they're allowing you now to take $35,000 from your RRSP towards your down payment, and as long as you pay them back within 15 years, there's no tax on that, right? So I don't think that's going to make a big difference. Now, one of the other changes that we saw is that the government's now actually going to co-own the home with you. So in Canada, whenever you buy a home and you don't have that 20% down payment, it's called an unconventional mortgage. So you need at least 5%. So between 5% and 20%, you are in that unconventional mortgage territory. Now, shrewd brokers are still able to find you mortgages, of course. Often it's through it may be through a private lender as well. And you are then insured with CMHC. Okay, so that mortgage is insured. It's a government program, and not to get too technical about it. Now, what happens is, going forward, the government can actually co-own the home with you, meaning that they will lend you an amount of money as long as your income, the household income, is not above $120,000. They will loan you, for example, $120,000, you and your wife. They will loan you $480,000. You come up with the other 25, and you can purchase a home up to $505,000. Okay, so let's review the math there. Let's say you and your wife together make $120,000 in total income, and now you multiply that by 4, you get up to 480, and then that's the government side, and then you're putting in 25,000 of your own money. Okay, and that's giving you a purchasing power of 505. Okay, very interesting. Now, there's a couple of catches to this. The government first says that if it's an older home, they are going to own 5%. So let's say 10 years from now, you go to sell it at $600,000. You've done fairly well. The government's going to take 5% of your gain. So they're going to take $5,000 for themselves. That's very interesting. We haven't seen that yet. Very shrewd on the government's part. I don't know if it's in the best interests of you or ourselves, of course. Now, the other consideration to that is if it's new, if it's a pre-sale, the government's going to own 10%. So again, if they're helping you with your down payment under 20%, they're going to own 10% of the profits. So if you sold it for a $100,000 gain, the government's going to take $10,000 of that. So they are getting in the home business. Now, those are a couple of changes. I don't think they're going to make a big difference here in Vancouver, because what can you buy for $500,000 anyway? Even in Burnaby, Richmond, New West, it's not going to make much of a dent. In the last 15 months or so, I've worked on about 30 purchases and sales of my clients, and I think I recall one that would have fallen into this category. So it's not going to make a difference here in the Lower Mainland. The third thing I wanted to talk to you today about was just the fact that the nature of our economy is changing. There was an article in the Globe and Mail about this. They called it the gig economy, and how a lot of the tech workers are being left behind. And what they meant was that it was harder and harder for people in the tech sector to get a mortgage. And this is because of the nature of their work. They might freelance, right? They might work for themselves. And so they may have 3 or 4 sources of income, but they can't get a mortgage. Because when you go to the bank wants, they just want to see your T4. They want a simple, straightforward mortgage. And that worked in the early 1980s when more than 90% of the Canadian workforce was salaried, right? Our parents, they worked maybe in a factory, or they had a salaried white collar job for a larger company. Well, that type of economy is moving by the wayside and replaced more by an economy where people work for themselves. And I'm a great example of this. I remember when I got into sales, I wanted to go and get a mortgage. And I was basically making 2-3 times as much as a lot of my friends. And I was turned down by the banks. And the reason was I hadn't hit their 2-year mark for having been in the industry. But we had the savings, we had the down payment, I had a good credit history, the income was there for almost 2 years. And so because of the small technicality, I got rebuffed and wasn't able to get into the market. And that's just me, but there's a lot of people in the tech sector that basically would be going through that same situation we went through. Now, I didn't let that stop me. I still went out and got a mortgage, and I ended up getting a mortgage for at a 7% interest rate with a private lender. Now, I can stomach that because I just knew that things were going to work out well for us. But that's the kind of thing I had to go through. And from that point, I was able to, we worked our way into a conventional mortgage 1 year later. But it's not really necessary. And you would think that the government would do something to acknowledge that fact, and at least, or just, that the banks would do something here that's going to make it easier for people who work for themselves or self-employed, freelance, to be able to qualify without having to, basically jump through all these different hoops. So I just wanted to talk about that with you today, as it does seem that the mortgage rules here are not working in your favor if you are self-employed. And maybe the best thing you might do is to go talk to an independent mortgage broker. They often have creative ways of helping you and also getting you fair rates as well versus what you'd get at the bank. So that's the big take home for today. Thanks for tuning in, and we'll see you next time.